And we extend my warmest welcome to you all to IMPRI Web Policy Talk. We are gathered today for a panel discussion on Viksit Bharat, Developed India by 2047 and a Union Budget 2025-26 as part of IMPRI's sixth annual series of thematic deliberations and analysis of Union Budget 2025-26. So, this discussion is being organized by the Center for the Study of Finance and Economics, IMPRI, Impact and Policy Research Institute, New Delhi, as a part of IMPRI Web Policy Talk series. I welcome you all to this enlightening deliberation and thank you for tuning into this discussion. So, now let me introduce this team gathering. Our chair for the session is Professor Nilanjan Banik, Professor and Program Director, BA Economics and Finance, Mahendra University, Hyderabad, and a visiting consultant at IMPRI. We welcome you, sir. The distinguished panelists for the session are Mr. Sobumoy Bhattacharjee, Consulting Editor, Business Standard, and a Professor of Practice, Director, Center for Regulatory Governance, Jindal Global Law School, OP Jindal Global University, Sonipat. Then Mr. T.K. Arun, independent journalist, Dr. Radhika Pandey, Associate Professor, National Institute of Public Finance and Policy, New Delhi, Professor N.R. Bhanumurthy, Director, Madras School of Economics, Dr. Surajit Das, Assistant Professor, Center for Economic Studies and Planning, School of Social Sciences, JNU. I welcome everyone. So, we look forward to learning from an esteemed gathering. And now, without any further ado, let us start the program. So, it's my honor and privilege to invite Professor Nilanjan Banik, sir, to start the program with the chair's opening remarks. Over to you, sir.
Thank you, Vanli. Hello and welcome all of you to this special session on budget. So we have heard from the finance minister yesterday some of the main points which have been talked about, and our eminent panelists are going to elaborate on that. Is the big thing this time, what we heard from the budget is a big tax rebate, in particular for the middle class. Although the definition of middle class vary, but there are some indication that around 3 crores people are going to get benefited from that tax cut, what is being proposed in this budget. Now, there will be some additional benefit in the macro level. For instance, the increase in consumption expenditure, because of late what we are seeing, and a tepid consumption expenditure growth, something which is also getting reflected in the stock market and the overall sense that maybe the rural economy was not doing well. The other main takeaway from the budget was, for the first time over the past many few years, we have seen that FM has been talking about how to make our MSME sector more resilient, because one of the things which is being talked about and being cited by many researchers, that the MSME sector in India is not that competitive because of inverted duty structure. Now, what does inverted duty structure means? It means that the cost of import on or the import tariff was typically higher on the imported input, which makes the MSME sector's product, in terms of when they are manufacturing the final output, less competitive in the world market. Now, why MSME sector is important? It is important for the simple reason we have close to 200 million population working for or earning their livelihood from the MSME sector. So from the perspective of livelihood and as well from the perspective of employment generation, MSME sector becomes the second most important sector after the agriculture. Also, we have seen that some element of rebate or in terms of increase in loan given for the agricultural sector, in particular for the farmers who are taking Kisan credit thing from the government. So what does and how around 400 million people who are earning their livelihood from the agricultural sector, how that helps? We have also seen an increase in allocation in the number of seats given for our medical colleges. The idea is India may not have, in terms of per capita basis, that many numbers of medical professional, which is very important when it comes to the health services. Also, we have seen in this age of automation, government giving incentive and trying to make more number of seats available in IITs and other national engineering colleges. So these are some of the welcome things that we have heard from the Prime FM and eventually vetoed by the Prime Minister, saying that this is a very good budget. But there are also some kind of not so great thing which we have not come across in the budget. For instance, the apprehension is maybe that many number in terms of social sector allocation towards health and education. We don't see that much allocation getting increased in the in education as well as health. We have also not seen the capital expenditure, which was growing at a faster rate. In particular, over the last 4 years, you will find that the capital expenditure was growing at around a CAGR of around 38%. But yesterday we saw that in terms of allocation towards the capital expenditure, there was not too much of that coming to the capital expenditure side of the story, which is very much required for building roads, port, hospitals, and basically physical infrastructure that we are talking about. So what would be the implication of that in terms of the growth that we see? Because there are two ways to approach this. One way to approach this is when you are doing the capital expenditure, maybe you are talking about the indirect way of boosting the multiplier. And that will actually help to boost income, and therefore eventually that will lead to increase in consumption. But maybe the FM has chose the more direct route of giving the tax concession to the middle class, which will have a more direct impact, hopefully in the short run, in terms of boosting consumption expenditure. So these are the broad takeaway. And so what we are going to do is we are going to talk about each one of this thematic area, more particular because we have such eminent set of panelists. We want to understand the economics behind each one of this policy and how much that is going to impact the consumption expenditure, because as you know that the consumption expenditure is the most important component of GDP, and therefore it is quite necessary for us that how through these policy measures that is going to impact our consumption expenditure. So without further ado, let me start with the very first thing, the big thing, which was a tax concession to the middle class. What does our panelists think about this? So let me first start with TK. If you would like to give your comment, what is the broader implication of that, of the tax rate cut that we are hearing on the economy in general?
So this, I think, is essentially a political maneuver to please the taxpaying middle class. See, the economy has been slow, and the government's attempt to increase the growth rate by stepping up capital expenditure in the last budget hasn't really panned out. The growth rate was 8.2% the year before, and this year it is coming down to 6.4%, in spite of the stepped up capital expenditure or a stepped up capital outlay, which the government actually failed to spend entirely in its entirety. So, if your economy is slowing and the world economy is in trouble thanks to Donald Trump's plans for a tariff war with the rest of the world and the consequent problems this will create for interest rates in the US and consequentially around the world, uh, there is going to be a serious problem with growth. So, when growth is in a bigger issue, you need to keep people happy by giving them a tax cut. So that the government has delivered. Now, I hear many people talking about this consumption boost having a major multiplier effect and, increasing economic growth. The fact is that this entirely, the giveaways in terms of income tax concessions amount to 1 lakh crore, which is 0.2% of GDP. Now, you have compressed the total expenditure of the budget by nearly 0.4% of GDP. So the additional boost is actually negative. If you look at including the tax concession, from the government expenditure side in the budget, the total demand boost is actually minus 0.2% of GDP. So, and you have no concrete plans for increasing investment to boost growth. And now they are talking about PPP, about which I can speak later. So, since there is no effective remedy for slowing growth, but still you have to keep people happy, at least those who are already employed and paying taxes, by giving them concession. The government has chosen to do that. I don't see this as any fundamentally, transformative kind of a move or something that will boost growth.
So, TK, just to, as a follow-up question, you said that maybe because this can be a political move because of the Bihar election coming. But if this were actually a political gimmick, then what actually stopped the government last year when you had this central election, to give this kind of benefit, because at that point of time, it would have made much more sense than this time, because the government is already formed. So it would have made more sense previous year when they had a vote of account budget, So what prevented them? Because at that point of time, finance minister was very much cautious in terms of keeping fiscal deficit under control, and therefore the consumption boost that we see happening in terms of tax concession did not happen last year, but this year. So how do you react to that?
What changed in between are the election results. The government was riding a strong wave of political support, and it was confident that it will come back to power regardless of how they fared in the budget. However, the slogan of 400 par, that they'll get more than 400 seats, completely failed to materialize. So this has made the government realize that it cannot take the voters for granted. So you need to win their support back by seeming to give some concessions. So see, all these reams of paragraphs on developing the rural economy, MSME, all is actually meaningless. Do you have any mechanism to ensure that small and medium enterprises are actually paid for what they produce and supply in time? As of yet, none. Your factoring service, there is an electronic platform called Threads. You haven't been able to make even state government enterprises fully on board on that platform.
I'll come to that MSME and the other things, but let me come to Radhika. Just to understand, you were working with macro data, just to understand that what would be the implication on the fiscal deficit part. In particular, when you are trying to, let's say, boost consumption with with this 1 lakh crore, what we heard is being given up by the government because of this extra benefit. What if for some exogenous factor, let's say that the crude oil price all of a sudden goes up, and then already the government is facing this shortage of this 1 lakh crore. In addition to that, if you have some exogenous factor which is actually going to impact our, let's say, crude oil price, which happens to be our major import, do you see that this plan of boosting consumption can get derailed? Because in that case, if the fiscal deficit goes up higher, you might see some inflation kicking in, So what would be your reaction to this?
2 points. One is this cut in taxes will definitely lead to increase in disposable income, but whether it leads to increase in consumption, that depends on a number of factors. Firstly, the propensity to consume. And the other thing also is that a lot of the households are leveraged. If you look at the RBI's financial stability report, it talks about increase in the household credit to banks. Banks' credit to household has been increasing, and that is why RBI has put a lot of brakes on banks lending to personal loans. So first of all, I think whenever if there is an increase, it might first lead to some kind of deleveraging. Also, it would lead to increase in savings because we have seen the household savings have also bottomed out. So these two factors are also to be kept in mind. So one-on-one relation cannot be assumed that if there is increase in disposable income, it would lead to increase in consumption. That is point number one. On the point on its implication on the fiscal math, so I had two slides on this. So I'll, with your permission, I'll just display those slides.
Please share.
Professor Arjun, can you please?
Yes, we are bringing.
As we prepare the slide, maybe Shubhamay, you'd like to comment on this? Or okay, the slide is almost here. Yeah. Please go ahead, Dr. Pandey.
Next slide. Yes, so this is important that, from the tax revenue side, the estimates for the next financial year, that is FY26, they appear optimistic because despite income tax cuts, income tax collections are expected to grow by 14.4%. That is number one, over the RE of the current year. And the other part is that the corporation tax is expected to grow by 10.4%. If we go back to the next slide, please. Yes, so here if you look at the so there are three bunch of numbers. So one is the actuals, then the as percent of GDP and year-on-year change. If we look at the corporation tax, we see that there is a 10.4% increase expected over the revised estimates of the current year. Now, this is very optimistic because if we look at the actual data from the Controller General of Accounts from April to November, corporation taxes have actually contracted by 0.5%. Corporate profitability has been subdued. Even for the third quarter, the numbers are not that encouraging. And in the coming financial year, with a lot of uncertainty, Trump's anticipated tariff wars, it is not likely that corporation taxes will see a rebound because corporate profitability is likely to remain subdued. And if there are other shocks, as you mentioned, if there is a rebound in global commodity prices, then further corporation taxes could see a hit because corporation profits could see a hit. So from the direct taxes, I think corporation taxes and income taxes, the assumptions are quite optimistic. And this is in contrast to the earlier practice, because till now, if we've seen the tax revenue assumptions, they have been quite conservative. But this time around, the government seems to have broken that trend. And particularly for direct taxes, the assumptions appear to be optimistic. On the dividend side also, if we look at the dividends and profits, again from RBI, the government is expecting a bumper dividends. That may be true because RBI has been selling dollars to prevent the rupee slide. So that may be true. But this practice of relying too much on RBI's dividends doesn't bode well for the ideal fiscal math. And also from the capital receipt side, disinvestment are suffering. We had for the current financial year, 50,000 crore was budgeted. The revised estimate is 33,000 crore, and for the next year again 47,000 crore. So there is a expenditure cut. There's an expenditure gain of 1 lakh crore, but from the revenue side, we don't see numbers looking very realistic. And so there could be challenge for the fiscal deficit target of 4.4% of GDP. And the last point is also the nominal GDP assumption is assumed to be 10.1%. Last year also it was for the current year, it was assumed as 10.5%. Advanced estimates suggest the number to be 9.6. So there could be some deviation from the nominal GDP side also. So these are some of the factors that could lead to some deviation in the fiscal deficit roadmap.
So going by your chart, what is the probability? Because right now the inflation numbers are easing down. So do you see that during the first quarter of the next fiscal, the inflation numbers firming up?
Inflation is likely to be under control, at least in the fourth quarter and in the first quarter of the next financial year. But beyond that, one does not know. And if inflation is actually lower, then nominal GDP number would be lower, and that would be problematic for the fiscal deficit to GDP ratio. And the tax buoyancy also is assumed to be quite optimistic, especially direct tax buoyancy, income tax buoyancy is assumed to be quite optimistic. So those from the revenue side, we see that there could be some deviations, particularly on the direct tax.
Okay. Now everyone is talking about the Trump tariff, So what percentage, because you said that this is a very optimistic scenario for the corporate tax. So two points. Over the last few years, corporate profits are actually increasing. And the reason is, if you look into our domestic economy by itself, 2/3 of the demand is driven by the domestic factor. So whenever we are talking about Trump tariff, even US is one of the largest trading partner with what is happening with India. But what percentage of that trade part will actually come to tariff, and how much of that will get reflected to this the corporate tax revenue getting less in the hand of the government? Is there any study that you have done?
If we look at the listed companies' performance, because we get quarterly data there at least we are seeing a decline in profits. And within the, especially manufacturing sector is facing the brunt of two things. One is the uncertainty on account of Trump's policies, uncertainty, and second, the China factor. Because of China's dumping of steel products and China exhibiting subdued growth, we have seen that manufacturing sector's exports have suffered because a lot of exports go to China either directly or even indirectly via other countries. That is suffering, and therefore manufacturing sector exports are really subdued, and that is leading to shrinking in manufacturing sector profitability. So to the extent that there would be some uncertainty, and to the extent, right now we don't have any study on the magnitude of the impact, but these two factors, America and China, they are likely to keep the manufacturing sector profitability under pressure.
Okay. So let me come to Shubhamoy. How much of this revival in the rural sector, one of the things that we are hearing is the agricultural sector is going to perform well thanks to good monsoon year. And also, given this tax cut, how much of you think is going to revive the rural economy?
What happens, thanks a lot, first of all, Niranjan and IMPRI for asking me to join this seminar. And I was reading and I was listening very carefully to what both Dr. Pandey and TK say. Always a pleasure to listen to them. In fact,
can you switch on your camera? Is your
okay.
Camera?
Yeah. So it's always a pleasure to listen to them. And I'm also looking forward to what Professor Bhanumurthy has to say. Rural revival through the budget, well, I don't think that is something that even the most optimistic side, the government really will be looking at. The rural revival has to be through other factors, growth revival, pushing up of rural, if the wage structure in the rural areas, for instance, starts showing a buoyancy, if the growth, because that had been tracking or rather underperforming the inflation rate for quite some time. It just started coming up to levels where it's tracking the growth rate of the, of the inflation and all that. So real wage rate has started showing. It's early days. Across Indian economy, it's not just rural sector, but across Indian economy, wage rates or wage growth has underperformed. And that I think is the basic, the basic sort of the question that this government went in the budget with. So I quite take on board what TK was saying, that the multiplier of the government expenditure isn't really there, because we are clearly reduction of expenditure and revenue expenditure. If we very loosely say that a large part of it goes to the rural economy, or at least the lower part, or at least the lower income groups, in terms of the subsidy, in terms of others income support, if that is not showing any multiplier, if that's not increasing up, then that definitely doesn't offer any substantive rise from the government revenue point, from the government's effect on the economy. So I take that quite on board. Also, the fact is that the tax revenue, I mean, that of course, as Dr. Pandey very well illustrated, over 10%. I mean, it's a 1.3%, 1.3 times buoyancy that we are looking at in income tax. Now, whether that will happen or not, we can talk about it later. But the specific issue of rural revival, let me put it this way. The government of India spends or will be spending 50 trillion rupees this year. That's the expenditure budget. Of this, the interesting part is, if we leave out the committed expenditure for wages, pensions, interest payments, and all that, a large central sponsored schemes are about 5 trillion, 5.4 trillion, 5.45, let's say 5.5 trillion. A very interesting data that you would see is the SNA data that has been introduced in the budget this time. Of the states having taken the money but having not spent it, and that is a substantial number. It's 1.6 trillion, which is effectively 30% of the centrally sponsored schemes. Now, somebody can say that, hang on, but that is something that states traditionally, going by the CAG report, states do send back to the center every year. But if they do, then the big thing that comes along is that what we are suffering from, or rather we have a challenge, is not that the center is not spending. 50 trillion is a huge number. To put it in dollar terms, that is about roughly more than the GDP of a country like United Arab Emirates, Singapore, Ireland. So we are talking very big numbers here. That's just the government of India budget on expenditure. But that number is not giving us the bang for the buck, because the productivity of the states is very low. And mostly, if you look at the SNA data even more closely, you see that the data is actually the worst performers are the sectors where we want them to perform well, which is health, education, support for the lower income groups. This is where, as on 31st December, states have the cash with them. States have the cash with them, but states have not spent. And if they are going to spend, and if someone says that if they're going to spend that remaining cash in the next 3 months, then that is exactly what we, as economists, you have talked about, TK has talked about, states should not be spending as a bunch. So why is the state performance of this money not been happening is a very serious question that we now need to look at as the budget multiplier. And I think that is where the problem is coming in terms of the government's money that is being spent, not getting actually spent on the ground or being spent on expenditure. Since I track this thing quite a bit, so I've seen what happens is typically states tend to take the shorter, easy way out, that you spend on things which are easy to report. So purchases. For instance, the number of schools in India where the boundary walls are painted every year to show expenditure on schools is a remarkably huge number. Now, who monitors that sort of an expenditure? What sort of learning outcome does it come when schools report that they have spent on school building, which is essentially painting of the building and the walls? This is where I think some very serious question has to come before we say that we will need to spend more money. I fully take on board that, yes, money by the government, the expenditure compression is a risky bet to take. But before I take that, I would say that the amount of money that is already available on the table, and this is a solid amount of money, is not being spent and is progressively going by the data. The first year's data that is coming out, time series data will start coming out. But if we patch it with the CAG data, we would see that the states, and typically the weaker states where we have the largest concentration of population, are the worst offenders in terms of their ability, in terms of the lack of administrative ability that's coming along. And to that, I'll just add one more point, which is that this is why states are very keen on freebies, because it's an effort to get that boundary, even that boundary wall, to be painted. But it's no effort to simply hand out cash to people. So states are so keen on freebies, political parties across the board, and every party is responsible here in the room, that they want to spend on freebies. They do not want to spend on the difficult job of managing the expenditure adequately. And I think that is where the challenge is coming up. I'll stop here.
No, so this is a very important revelation, So with that, let me come to NR. Is this the way to justify that because of the states not using their share of the money, which is given by the center, that this time in the budget, we saw that the capital expenditure for the first time has actually, in absolute term, the allocation is lower than what was reported last time. And the second part of the question would be, like what Shubham said, it's a very important point that if you have the politics, which is if I just by giving freebies able to generate the election outcome, what would be and how long the impact of that state fiscal deficit is going to boomerang? And whether this kind of game, what we have seen either in Maharashtra, Karnataka, election after election, how long we are going to see this playing out?
Yeah, thank you. Thank you, Nilanjan. Can you hear me?
Yes, we can hear you.
Yeah, so I think very interesting points made by previous speakers. I just wanted to add to what they already said. In terms of, I think I'll take one step back from the budget. I'm sure the audience also will be benefit from that explanation. I think as this panel discussion is also very rightly put forth, like it's meant for Viksit Bharat. I think one needs to really look at economic survey and budget together, okay? And there are many people who can argue that, a survey has presented many ideas, but I think the budget has not really addressed most of them. So to that extent, the economic survey is, in my view, very, very well-researched document, and I think we need to spend more time on that. In fact, the headline from the survey is that, deregulation, right? In fact, next day, most of the papers took up the headline saying that get out of the way, they're saying that economic survey says that government should get out of the way. So that means I think there is a clear discussion, clear thinking, in my view, in the public policy that there's a need to bring back the private sector in the overall economic growth as development for the Viksit Bharat to be achieved. So to that extent, in fact, I've been arguing for some time that 3 years consecutively 3.5% capital expenditure, and I think going further again for 3.5% would be really unsustainable. In fact, we have seen many pressure points in the last year where the capex could not really take up, especially because of the elections, or because of not just the general election, but also there are some state elections, like big states like Maharashtra and other states have gone for. So there is a capacity constraint, as Shubham very nicely put it, that there is a capacity constraint at the state government level, and also to some extent the central government, because you cannot continue this huge capex for so many years.
Let me interject. Capacity constraint maybe for the state which are going to the election. What about the states, other states, because there you have this dual objective. One is, do I actually give freebies or do I build more road sports, and for which maybe I'll not get the brownie points?
I think Shubham has put it very nicely. The weak states cannot, even there is no election, there is no capacity there. in many of
Right.
the states. So we thought, states like Maharashtra and other, big states, they are supposed to be spending more on public investment. So even they could not do it, leave alone other states. So even the 1.3 lakh crore allocation that has been made for the states were not really released, at least by the end of December. I'm told it's just about 90 or 95 lakh crore has been. This is after relaxing some of the norms. Okay, so in that sense, there are constraints in terms of going for a larger capital expenditure. That is one explanation. The second explanation is, I think last year there was so much discussion about declining household savings, right? Radhika very indirectly mentioned about, households had so much leverages and all those things. So there is a clear decline in the household savings also. So if you continue to have 4.8% or 5% fiscal deficit, what is left for states or what is left for the private sector is very limited. To that extent, I think it was important for the government to bring down the fiscal deficit so that, there will be space for private investments. So I think in that sense, what government has done to bring down the capex to 3% or 3.1%, I think that is the right way in my view. So that leaves more resources for the private sector. And I think even RBI is struggling with the liquidity constraint. So given, if you look at macro picture, there is a clearly pressure points in the liquidity particularly, and whatever the investments you are doing by the government, if it doesn't crowd in through more resources from banking sector, will not have the multiplier impact that we wanted. So I think that is one reason why there is at least I appreciated the way the government has brought down the overall fiscal deficit to 4.4. If not for the tax exemption, I think they would have come down to 4.1 or 4.2. So in that sense, you would have had more resources for the private investments. The second point was something about, you asked something about.
Yes, whether this thing about freebies, how long the states can continue, because most of the states like West Bengal, and one of the problem with the freebies is you are actually neglecting. For instance, if I am giving more money to the Kanyasri kind of thing, I'm actually having less money to be given
Yeah,
to
I got
education or other sectors.
I got the issue.
Yeah.
But first of all, I think, at a academic level, it's very important to understand what exactly this freebie is. I don't think anything that state government does is called freebie. Okay. And at the same time, there are some of the areas only state governments can do. I'll give you one simple example. Despite so many efforts by both central government as well as state governments, we have not really succeeded in the area of nutrition. Okay. Now, that is the biggest failure in my view. I mean, after 75 years, we still see deteriorating conditions at the nutrition level. I mean, you talk about women or girl child, but I think that's where some of the states came up with some of the schemes like, cash transfer schemes to the women. And the assumption is that such a cash transfer to the women will have its impact on the nutrition within the household. I mean, there are studies that has been shown. So it doesn't mean that, those schemes are should be called as freebies. But there are other schemes. In fact, expenditure rationalization should become a condition in the Finance Commission recommendation, in my view, because there are some of the states that have done, the state government themselves don't know how many schemes or how many lines in the total social sector expenditure that they have in the budget document. So I think you can go with the kind of new schemes, rationalize, and where you implement slightly better, because right now you have the DBT system, but there are many schemes which are part of the legacy. We don't even know what happens to the scheme. Within first 6 months, you will see that 100% allocation is spent. What Shubham argued, that there is so much of unspent balances in some of the schemes which are later been implemented. But there are so many schemes which have been implemented for a long time, and there is 100% utilization within first 6 months. So I think the state, all the state government, I'm not saying one state or each other state, but I think all the states should start doing this rationalization of expenditures and then prioritize. Okay, so
Which one is big?
as Shubhamay said, even we cannot go and see which school they're painting, but I can tell you wherever you are in this country, I can tell you that the easiest way of spending by the states is actually giving advertisement in the newspaper, full page advertisement in the newspaper. Somebody from Punjab saying that Happy Independence Day in Chennai. So these are the things you do see that that is the easy expenditure, visible expenditure that we can see from whichever part of the world that you are. So I think
yeah, we have been saying this. For
I
instance,
have
Bengal mean business.
I have become unpopular for the past so many years by talking about it. Now I'm thankful that Shubhamay joined me in this whole discussion. Thank you, Shubhamay, for that.
Okay, let me bring in Surajit over here, because Surajit, one of the things that we are seeing again in this budget is not much allocation given for the social sector, be it education, because on the one hand, we are hearing that the number of seats in IITs are getting increased. But on the other hand, if you don't have adequate number of teachers, who are going to teach these people, So what would be your take and how you rationalize this whole thing, that something that we are seeing in the capital expenditure sector, what matter more is the implementation part. What do you think about this?
Well, first of all, thanks for having me here. I think as far as this question is concerned, I think social sector, particularly health and education, are primarily state subjects. And more than 80% of the spending on health and education are incurred by the state governments, and central government incurs less than 20%. Now, in this particular budget, what we have seen, many people have argued that there have not been sufficient increase in the expenditure on health, education, etc. But at the same time, there has been the revised estimate for this current year, 2024-25, as compared to the budget estimate of the year. There has been a substantial cut in the center to state transfer of resources by more than 1 lakh crore rupees, which is including, apart from the tax devolution part, which is formula based. If we club together finance commission grants, other grants, and all the centrally sponsored schemes together, then there has been a cut of more than 1,12,000 crore rupees in the revised estimate, which is substantial. And that would take a toll for the state governments, because if we look at the composition of state government expenditure, health and education, particularly social sector, is a big chunk of that. So if there is a cut in the center to state transfer of resources, already state governments are in extremely tight situation. On top of that, if there is a reduction, then I guess it would have serious implications for the expenditure on health and education incurred by the state government. So
let me interject you, something what
Sure.
Bhanumurthy was asking, or actually telling us, that many a times, in spite of state trying to do something, for instance, nutrition or even open defecation, we don't see that thing getting actually implemented, because from the perspective of it's not about only building toilet, it's about how to make people use toilet, So how is there any way? Because one thing is you can paint, like what Shubhamaya mentioned, that paint school wall, the other thing is try to give more emphasis in getting quality teachers, who can actually make the difference in terms of the education outcome, or for that matter, in this case, nutrition outcome, or for that matter, open defecation outcome. So is there any carrot and stick policy with the government, central government? Because at that point of time, what matter is whether this thing are being implemented in a proper way, as opposed to giving just the fund, And as we have heard both from Shubhamaya and others, in many cases, the fund which are given are not being utilized, So it can be, I think Bhanumurthy has a point. Yeah, please.
No, I'm just looking at this data. Total transfer to the states and UTs in 23-24 actuals is 20.6 lakh crore, and 24-25 RE is 22.75 lakh crore, and BE 25-26 is 25.6 lakh crore. I don't know which number Surjit is talking, but anyway, I can talk to him later.
Okay. Yeah, go ahead, Surjit.
Sir, I was talking about 24-25B as compared to 24-25 RE, the current financial year. There has been a substantial decline in transfer. So, probably, sir, I am not the right person to talk about the implementation. There are huge implementation challenges of all government policies, all government programs. I teach macroeconomics and I mean public finance and econometrics. So that's my area. I would like to say that it's not only about social sector. In fact, you were mentioning about this middle class thing. I mean, it depends on the definition and so on. So if I can share a couple of slides, if you have 2 minutes time, then I would just like to show, about this whole, as Professor Bhanumurthy, is the slide visible?
Yeah, slide is visible.
Okay. As Professor Bhanumurthy was mentioning that economic survey is important. This is from economic survey of this year 24-25, page number 378. This says, this is the wage rates from our PLFS data. And here, if we look at the last column, for self-employed people, monthly income is, average monthly income is 13,000 rupees. For regular salaried employees, monthly income is 20,700 rupees, and casual laborers, it is 418, which turns to around 12,000, 13,000 rupees per month. So we have done some more calculation based on exactly this database, PLFS 23-24. According to that, more than 25% of our labor force in India earns less than 100 rupees a day or 3,000 rupees a month. And only around 25% of labor force earns more than 15,000 rupees a month or more than 500 rupees a day. Then we were looking at this tax data.
Surjit, sorry to interject again. Can you go back to the previous slide? Because if it is 15,000, so basically we are talking about around 3 lakh, right? Times 12, which is average monthly earning of workforce is therefore around the India's per capita income of $3,000 US. That's what you're saying.
I can't convert right now, but 15,000 rupees means
per month, right? You were saying it's per month?
Yeah, 1,80,000 rupees per annum.
So it's actually less than, because $3,000 would be around 2,50,000 rupees. Yeah, so it's much less. Okay.
Yeah.
And this is by because I also understand this 3,000 that you are saying, that's the average income of a farmer also. If I look into the agricultural, latest agricultural survey.
Yes, this is including all the sectors and rural, urban, male, female, as you can see from economic survey data.
This is low. That's all I'm saying.
Must be, sir. Yeah. Now, we were looking at CBDT data of 23-24 financial year. This income slab wise, there is this, this is page number 9. It is showing that the number of...
Can you please make it full screen? Can you please make it full screen?
I have... Okay.
Yeah.
Is this better now?
Yeah, this is better. Yeah.
Yeah. Now, if we look at the numbers, number of taxpayers who have filed the return and whose income has been more than 5 lakh rupees per annum and up to 5 crore rupees, etc., then we see that if we from PLFS we get the total size of Indian labor force is around 60 crores in 2023-24. And only 2.85% of population or 6.8% of the labor force in 23-24 could earn more than 5 lakh rupees per annum. And in that particular table, it is written that 2.35 crore people have paid direct tax, but they have not filed the return. So if we add all of them, and if we assume that all of them have earned more than 5 lakh rupees per annum, then who would actually get the benefit of this tax scheme?
And
Up
in
to
fact,
12
this
lakh
is
rupees.
again a very startling revelation, because with this new 12 lakh as the limit, this 2.85 will be below 1%. That's what you're saying.
But I'm saying that even if we include 2.35, I mean, I'm not saying this is their data fluidity.
2.35 is for the 5 lakh. But now I'm saying that for the 12 lakh, this percentage will come down.
It will be much less.
Yeah.
12 lakh, this is not there. 10 to 15 lakh, that slab is there. So we don't have data according to 12 lakh slab. However, if we calculate 5 lakh and above, and if we incorporate 2.35 lakh, then also it will be less than 4.5% of population. And there could be more than one earning member per family. So it would be around 10% of the families in India. Now, so this is not middle class. Clearly, we are talking about top 10% families or population of India when we talk about direct tax benefits and so on. Yes. Now, I was seeing in the media that about the multiplier effect, which we were discussing earlier. I think that, of course, there would be some multiplier impact on the growth and on the GDP because of this tax reduction. There will be some increase in consumption, definitely. However, the estimate is 1 lakh, around 1 lakh crore rupees of additional disposable income for the sociological middle class, let's say. So that will have some multiplier effect. But at the same time, there would be two more things. One is there will be some import leakages, for sure. If GDP grows, then in open economy, the open economy multiplier would be much less than the closed economy multiplier. Secondly, I think that if that amount of money could be spent on social sector, health, education, etc., which is availed mostly by the poorer section of population, their marginal propensity to consume, Radhika was mentioning, is much higher than the richer section of population, whose saving propensity is relatively higher than the poorer section of population. So the multiplier effect could have been possibly larger. I'm not saying that trade-off is between spending the money on health and education and giving tax concession. However, I mean, we are operating under a situation where profit rate is falling, investment rate is falling for last 10, 12 years now, not only because of lockdown, even before that. So it's I mean, we are entering into a recessionary state slowly. And the world economy, not only our economy, the world economy is entering into a recession. That is another challenge, that export-led growth is not a possibility anymore. So export cannot play the role of engine for growth. So in such a situation, how to boost domestic demand is the challenge. Now, I think that one good step is there would be some increase in disposable power for some section of population, but simultaneously, if that wouldn't have taken place at the cost of reduction in health expenditure or education expenditure or social sector in general, which is availed mostly by the poorer section of population, it could have been possibly better.
Okay, let me come back to Radhika if she's still there. And the question is also for you. So is there any study which kind of showcase what is the difference in multiplier if I were to, let's say, give tax reduction as opposed to if I were to boost my capital expenditure spending? Or for that matter, the social sector spending. Is there any studies which kind of
there are
kind of differentiate what are the different multiplier that we are going to get from which sectors?
Yes, there are studies. In fact, Professor Bhanumurthy, me and Professor Sudipta Mandal, we developed one macro model in NIPFP long back for the government. And there we have seen we estimated capital expenditure multiplier, revenue expenditure multiplier.
How much is the capital expenditure multiplier and revenue expenditure?
Is much higher than the revenue expenditure multiplier in general.
How much that would be, like 2.5, 3?
I don't exactly remember the numbers, but later on, I think Professor Bhanumurthy and Shukarna Bose, they together wrote a paper in EPW.
If you can comment on that, that would be great.
I thought this little boring to talk about capex multiplier after 3 years, because almost everybody spoke about it. So we have estimated 2.45 for the capex.
2.45, okay.
And
what about the consumption?
Revenue expenditure is about close to 1. Yeah.
Oh, close to 1. So there is
But then the new thing that happened since yesterday, I think that paper is getting referred again, is that that paper also includes the tax multipliers. In fact, there is no other study that covers the tax multiplier. So the income tax multiplier, in fact, I was also looking back to that study after so long. So the income tax multiplier is minus 1.02. Okay. So lower the tax revenue, higher the GDP. So that is why you have a negative sign. So I think in this whole discussion about the multipliers, yesterday's situation is slightly different from the number that we generated. For a simple reason, all these multipliers are partial multipliers. Okay. When you give a shock to capex, when other things are same, so what would be the impact on the growth?
Marginal, yeah.
But yesterday what happened is there are two shocks. One is, there's a continued shock on the capital expenditure, and then there is also shock on the income tax. So there is a dual shock that happened yesterday. So the scenario should capture both the impact of both these interventions together. And in my view, that will be much more substantial than the 2.45 that we have estimated.
So what would be the net impact? Any idea?
No, we didn't do that. In fact, we need to do that.
Then my sense is that there will be some positive impact. However, net, it is very difficult to say, because if there is a reduction in social wages in terms of health and education, because if government spends relatively less on health, education, social sector, then out-of-pocket expenditure of people on health and education increases. So that way the purchasing power for purchasing other commodities would come down. So there would be a negative multiplier effect. Now, if everything would have remained the same, ceteris paribus, if there is a tax reduction, we would say that there would be a positive impact on the overall GDP. However, if there is a reduction in taxing, and on the other hand, there is a simultaneous reduction in the social sector spending by the government, then it is extremely difficult to say what would be the net impact.
Okay, great. So let me address or let me come to the next big thing, which is the MSC sector and the job creation. So TK, you have been, I've been reading some of your piece. So what do you think that this reduction in some of the essential inputs in terms of their tariff, how much of that is going to help the value addition that is being created by some of the sectors which are in particular under the realm of PLI scheme?
I'm not a great fan of these tinkering with individual rates on particular sectors. Because what is the input for one sector is the output for another sector. So if you lower the import duty on one particular sector, thinking that that will benefit another sector which is using that as input, it will hurt the sector that produces this particular product on which the import duty is very lower. Now, for example, they decide to remove the import duty on some forms of scrap, particularly electronic scrap, which are battery materials. This is completely stupid to my mind. If we want to actually encourage recycling of electronic waste in this country to retrieve all the valuable metals which are available in all the e-waste, you need to protect the industry. If you dump everything from the rest of the world, why will anybody have an incentive to recycle stuff in this country? It's a very vital sector. And as more and more vehicles turn electric and the demand for batteries really go up, you will find the scramble for the precious minerals that go into battery production, etc. It will be so intense. The only way to prevent major social conflict and perhaps international conflict in the countries which are rich in these minerals and major environmental damage while mining them, perhaps from the seabed, is to actually recycle what we already have. One of the chaps who founded Tesla is now setting up a company to recycle precious metals from e-waste. So he hopes to actually recycle everything so that nothing is wasted. So this is the way the world is going. And here we are saying that we'll allow this Indian waste to be completely unprotected without any incentive to recycle this. So I think that's a completely stupid policy. You need to have low uniform tariffs on everything so that everything at the same effective rate of protection. I mean, the effective rate of protection is something that just doesn't seem to go into the heads of our policy. They only want to look at, just the input duty. So, and the other thing is that MSME's main problem in this country is actually credit. If you ask MSME federations, they will tell you hardly 15% of their credit requirement is met from the formal sector. The rest is sourced from informal sources of various kinds at a much higher cost. Now, and another major problem is that the prompt payment. If a company supplies something to a larger company, that company will hold back releasing payment for 5 months, 6 months, 7 months, 8 months. So this small company, which has borrowed money to produce this at a very high cost, they are giving credit to this large company, which can actually access credit, say 10, 12%. And then they are suffering this discrimination in terms of credit taxes for ages. There is no solution to that. These are the kind of things that the government needs to fix. Now they have increased the capacity and turnover limits in the definition of MSME. How does this help a really small company? Which means a much larger company will be able to avail of all the benefits that are essentially meant to benefit a smaller company.
But what about the invoice discounting kind of thing? Because now we see some private platform, like what you mentioned, that it takes time for the MSME to get the money back from the big corporate houses, but they can also start trading in the invoice, that what we call the invoice.
So there is a conceptually a very neat platform called the Trade Receivables Electronic Discounting System.
Yes.
Trades. So vendors as well as big buyers and banks and other NBFCs are supposed to be part of the system. So the trouble is, if a company, this is the factoring service, you hand over your receivables to a financial agency.
Right.
So then the recoveries from between the financial agency and the large buyer. Now, a large buyer can bully a small supplier. It will find it difficult to bully ICICI Bank. So the large supplier resents any small vendor going to this platform. They will say, we'll buy from somebody else. And this hasn't been disciplined even for PSUs. If a PSU is a large buyer, even the PSU will not be part of the TREDS platform, especially state government enterprise. This is the state of affairs. But I want to, draw attention to what I see as a major positive with this budget. One is what Professor Bhanumurthy said, the nutrition part. There is a scheme to enhance the nutrition to very small infants and mothers, lactating mothers in the scheme. I think that is a very, if it's effectively implemented, that'll be a big boost to the overall human capability of our population, including raising IQ. That is a small thing, but it's a very important. The other thing is the revival of public-private partnership. Now, PPP is something that was the norm during the previous UPA regime. Now we built the Delhi airport, the Mumbai airport, we built major, say, highway, the Delhi-Agra expressway. We built thousands of kilometers of highway under PPP. However, this PPP also led to leakages, sometimes led to delays, and it was labeled as a way of transferring money from the public sector to tycoon, and labeled as a completely corrupt system by the critics of the UPA government. And therefore, when the present government took over, they completely abandoned PPP. Everything was state funded. You either had the government itself doing on an EPC model or by annuity. But they abandoned PPP. Now, if you bring back PPP, that will be a very major boost to actual investment. Capacity utilization in the manufacturing sector has been stuck below 75% for the last 10 years. So there is no actual mad rush on the part of industry to augment capacity in their own productive sector. So the only way the private sector can actually invest is if they are given an opportunity to invest in infrastructure. So PPP will actually allow this to happen. But then for PPP to happen, it can't happen immediately in 1 month, 2 months, or 3 months. You need to design sector-specific, intelligent, coherent PPP policy. That doesn't exist right now. So things like all the airports being awarded to one particular company or individual. Now, all this happens of a bad design for the PPP contract. You have just one bid parameter. How much money will you pay to the government per passenger at an airport? That is a parameter on which the airports were privatized. This is a completely stupid bidding parameter. Somebody who was clout in the government and confident that he'll be able to increase airport development charges or passenger user fee in the airport by using pressure on the government can bid as high as they want. So when other people bid 40 rupees, this person who has a clout bid 77 rupees or 80 rupees because he knows that you can raise the airport development charges and record this money. So this is a wrong, flawed design of PPP. So if you want PPP to work, you need to intelligently design the policy. So Professor Rang Singh of Delhi University, he studied PPP and he discovered that if you, let's say, highways, if you include maintenance as well as toll collection with the main construction contract, then there's actually a cost overrun because the guy spends more money building the road because he wants to reduce maintenance later on. And the project time overruns are minimized. So these kind of insights need to be brought in to design proper PPP policy. Then you can actually do this. So that is a good thing about this budget. There is finally, there is some sense that the government by itself cannot lift the economy out of its growth slowdown and you have to bring in the private sector. But for that, you also need to have a functional bond market. You can't just do this with the bank finance. And you don't have a functional bond market, corporate bond market, because the bond market is split between the RBI and SEBI. The regulation of government bonds is with RBI and that of corporate bonds by SEBI. People who are actually playing in the bond market will like to leverage, transfer between these two, and they find it difficult. So you're a stunted corporate debt market. And unless you reform that, you will not have a large-scale infrastructure being funded by the bond market and by the private sector. So all these things need to be addressed if you actually want to have functional PPP and revival of investment. And I don't see this happen, any indication of this in this budget. That's very disappointing.
Okay. So Radhika, we were actually looking for you. So what do you think? The government is also giving some incentive to the tourism sector. How much of that will actually help to boost job creation, or for that matter, improve the GDP? Because tourism is around 7% of our GDP. So any study, the multiplier effect of tourism vis-a-vis other social sector, how much of this allocation towards the tourism industry is going to help? You're muted. Yeah.
In terms of studies, I don't think we have studies, but what is important is that we did some stakeholder consultations on this. We also spoke to some private sector participants on this, and their idea was that tourism should be encouraged because tourism is in terms of multiplier, the channel through which it can boost growth is through employment provision. And this time around, and last year also, the kind of thrust that is being given to tourism by both central government and also encouraging states to partner in tourism, be it medical tourism, spiritual tourism. In the medium to long run, it is a positive for employment generation because, we talk about agriculture, we talk about construction as important sectors for employment generation. The role of tourism in employment generation is something which is not appreciated, but it is a very crucial sector for employment generation. And a lot of private sector participants have also suggested that there should be more thrust towards tourism that we've seen for the last 2 years. So those were the two positive, and this is a positive initiative. I just want to, talk about the PLI scheme, one point that was discussed in by the previous speakers also, and also on the PPP point, 2 points, just 2 minutes I'll take. On the PLI, we have seen that there has been very low disbursements on PLI. So that is one point. And there's only a few sectors, particularly electronic sector, that has benefited from PLI. Other sectors have not. So this practice of extending PLIs to other sectors should be discouraged unless and until we are able to fix why the disbursements under PLIs are being low. There needs to be more transparency in the criteria for PLIs, what kind of criteria is fixed. And also there should be criteria, value addition, how much value addition is there. The calculation of value addition for various sectors vary. How electronic will contribute through value addition is different as to compared to how a labor intensive sector will do. So that is very important. Value addition calculation, some revision of the criteria for including any company in the PLI scheme, and more transparency. So I think a comprehensive review of PLI scheme is very essential before we extend to other sectors. And this time around, there has been emphasis on other labor-intensive sectors like toys, on leather, and so on. And that is important. It is positive from the viewpoint of employment generation. On the PPP, it's a very important step towards infrastructure creation, in addition to the other two things that they have done, that they have announced: asset monetization 2.0. So asset monetization, private sector participation, public-private participation, these are all important steps. But what is important is to look at the implementation specifics, particularly PPP. We have seen that its results has been mixed. In some of the sectors, it has done well. In some of the other sectors, it has not done well. So contract enforcement, as we've heard that, the design of PPP policy needs to be very ideal. Contract enforcement, dispute resolution, all these things need to be very fine-tuned. Then only the PPP model will pick up. And in terms of just last point, in terms of, since we were talking about corporate bond market, and very important point raised on the financing of MSMEs, we have also seen that in terms of the outstanding credit to outstanding bank credit, less than 5% is allocated to MSMEs. So while there's a lot of emphasis on MSME credit, but formal credit to MSME is abysmally low. What will benefit is that firms should access the corporate bond market, and that corporate bond market should be more liquid, and it should be more it should have more depth and liquidity. There were discussion about corporate bond market in the economic survey, that the regulations, the prescriptive regulation, which allow the insurance firms to only invest in more than AA rated bond, all these need, unless it gets a flip, we will not see MSMEs being able to access more of the bank credit, which is as a share of outstanding bank credits very low as compared to some of the other countries, comparable countries. Their outstanding bank credit to MSME is almost 20 to 25%, and it also rises to 30 to 35%. So in our case, it's hardly 5 to 5.5%, which is very low. And
no, so that point is,
yeah.
So that point is very valid, but I was talking to a few bank managers, and
Yes.
they say that the problem of the MSME sector is they don't have a cash flow statement, on the basis of which actually you can give loan, A. And B is when it comes to scaling up, So for between, let's say, 25 lakhs to 1 crore, I still have some collateral to show. But when it comes to scale up from 1 crore to 5 crore or 10 crores, I don't have any collateral. So do you have done any research as to how to get out of this kind of genuine problem, I'd say?
There are two things. One is the role of fintech is very important in this to ensure last mile connectivity and to also have a proper data backup on what is the credit worthiness of these MSMEs, because the role of fintech in this case is very important. We have interacted with some of the fintechs in this field who have tried to improve the credit allocation towards MSMEs. So I think greater workflow needs to be done towards fintech and RBI's emphasis on those fintech that can help bridge the gap between MSMEs and bank credit flow. So that is one point.
Okay. I think TK has a point. TK, go ahead.
So we have this account aggregator framework, which operationalizes the consent layer of the India stack. So if you make payments electronically, that data can be captured.
Okay.
They can be shared. So all financial activity of a entity, whether it's an MSME or an individual, can be collated and presented to a potential lender with the consent of the potential borrower. And this is a facility that India has created, but it's sadly not being utilized. So all banks are part of this, or the GST network is part of this.
Yeah, GSTN, right.
So how much GST a company has paid, how much GST input tax credit it has claimed. So to say that there is no cash flow statement is completely ridiculous, because you can have the collation of this entire financial activity data through this account aggregator framework, if only banks are willing to utilize it. The point is that because you don't have a bond market, Tata and Birla borrow from the bank. For the banks, it's convenient to lend to very large borrowers, very low risk, very low transaction costs. You make the loan and sit back happy and go and drink tea in the evening. Whereas if you want to assess the risk of small, medium enterprises, it's actually a banking job. So they don't want to do that. This is the simple reality.
Okay. So let me come back to Shubhama. So do you see anything in the budget which is going to boost or generate jobs, more jobs? Because that is one element which have been talked about, not enough jobs are getting created because of automation, because of large language models. So do you see anything in this budget which hopefully, in addition to boosting consumption, can also create more jobs? You are muted. Sure.
Thanks, Ranjan. That's an interesting point. Let me put it this way. I mean, I take on board both what TK was saying and Radhika was saying about the ground problems, the ground realities in terms of both the MSME sector or other sectors being able to access credit. However, a budget as an instrument is not the place where we look for solutions for these sort of things. A budget of the government of India, and this is the government itself is responsible for creating that misapprehension among people. It tries to think that it can do lots of things for lots of people. If central government's budget is supposed to do only two things: allocate money for large chunks and wherever it's necessary, and keep the financial housekeeping in order. Now, Finance Minister Nirmala Sitharaman has done that. She has kept to the dharma of keeping the fiscal deficit in control. In a year, when the globe is tossed with the maximum amount of uncertainty, I can't think how much more useful than that fiscal deficit number is. She has kept it. No commentator has said that figure is something that she will not reach. It's a huge achievement. Keeping that fiscal scorecard steady gives inflation the steadiness also. It creates the base for RBI to think of rate cuts. Remember, more people in the lower income group depend on rates, interest rates, rather than on tax cuts. Every time the government of India keeps budget numbers steady, it actually helps the poor by allowing RBI the space to cut rates. This is often not understood well. We might wax eloquent or we might have cavils about tax cuts. They have, as lots of people have said, limited ability to spur consumption. I take on board what Dr. Das was talking about, only the 10%. Yes, certainly. But the big thing of this budget and of the successive budgets over the years has been the commitment to fiscal deficit. For a poor country, this is, you cannot imagine how much more significant this is than to say that our fiscal numbers are sacrosanct. And this is what will help investors to come in. For medium and small enterprises, a cut in rates is much more important, whether from the formal sector or from the informal sector. And in an inflationary environment, there's going to be no cut in rates. So that the first thing that the finance minister has done in terms of the dharma of ensuring that there is no risk there. I think that is a very major achievement which must be understood. The second part is that all the other problems of the procedural problems, and which are very big issues, like the PPP issues and others, do not need the budget to be sorted through. They need good understanding by the bureaucrats to be able to work out what are the right PPP models. A budget can't give directions on those, shouldn't even give directions on those. It has to be understood by others. Similarly, like obviously finance ministers actually are responsible for doing this problem. They say that we are doing this for tourism or creating that tourism circuit. That's none of their business. Let business find out whether the Buddha tourism circuit is good or whether the Sikh identity triangle is good, or whatever. That's up to them. You just keep the cost of money low, ensure that there is no adequate external and additional cost that is raised. What is the cost that is raised? For instance, today's paper carries a report that some inspectors from the National Accreditation Committee for Universities have been caught for taking bribes. Now, we have taken away licensing, labor licensing away, but we have now created a new source of corruption by accreditation of universities. So where would a good university want to come in? It will not. And if it comes, it will raise costs for the students. That is where the problem, these are where the problems come in. And that is where the ease of doing business comes in, when the government administers less and gives more space for different sectors to go through. So as I said, the budget has not done anything wrong. In fact, it has done the most important thing, which is that it keeps the inflationary momentum low and creates a space for RBI in next couple of days to say that it'll take a positive view on interest rates. And I think that is, I mean, to me, that itself is sufficient. Thank you.
So we are kind of running short of time. So let me finally get to NR. So one thing we have heard that inflation is going to be kept under control thanks to our budget deficit is kept under control. Do you believe that maybe because of some extra money in the hand of the people, because of this tax cut, this could eventually be inflationary in nature, and B, the way because of the Donald Trump is threatening all over the world, the Trump effect, which is in terms of tariff, is going to add on to the inflation that we are seeing?
Yeah, whatever the prediction that we make on inflation right now, there's a potential to go wrong because we don't know what US presidency would do. Now they covered only 3 countries. I don't know, tomorrow they might add more countries into that tariff net. So we don't know how it's going to play out. But I think in terms of monetary policy, I think as Shubhamay already pointed out, the way the fiscal consolidation roadmap is being adhered by the finance minister is going to be a good news for the monetary authorities. Okay, so I think, one needs to understand that, for the past 3 years, one thing that really made India slightly very different compared to other countries is the kind of a coordination between the fiscal and the monetary authorities. And I think that really worked well, and it has actually ensured a kind of a stability in the overall macro as well as fiscal as well as financial market. So I think this 4.4% is certainly going to be a good news for them. And most importantly, just to add to what Shubhamay said, it's a transparency, the fiscal transparency. I'm sure even a big critic also would support this argument that the finance minister ensured fiscal transparency in the last 3-4 years. So all these things have actually play a very, very positive role in attracting more private investments and also the foreign investments as such. So I think going forward, we see that better coordination will really help India to grow both in terms of growth, GDP growth, and also in terms of maintaining inflation.
Okay, I think Surajit has a point to make. Yeah, go ahead.
Yes, quickly. I mean, in this crisis situation, I think I would go with expansionary fiscal policy, Keynesian kind of demand management policy. And here in this situation, I think as compared to 2023-24, when the union government expenditure as proportion of GDP was more than 15%, has come down to 14.2% now. And revised estimate 24-25 has been, I think, 14.55%. So it is gradually coming down, the size of the union government as proportion of total GDP, which is not probably the desired direction of fiscal policy under a demand constraint situation. I don't believe that under a demand constraint situation, inflation happens primarily because of excess demand or overheating. Primarily in Indian context, everybody, even RBI, is acknowledging the fact that inflation is primarily happening because of food and fuel price increase and because of other supply side factors rather than the overheating of the economy. So under such a situation, I think expansionary fiscal policy is the need of the hour rather than contractionary fiscal policy. And more importantly, I think inequality, which is already very high in the economy, as I was arguing, that there has been some relief given in the direct taxes, but nothing in indirect taxes. Therefore, the degree of inequality may increase over time, and that may have again a recessionary effect on the aggregate domestic demand, in my opinion. As I was arguing, following Kaleski, that poorer section of population would have more MPC rather than richer section of population. So I think reducing inequality by putting more emphasis on direct rather than indirect taxes, I think spending more money on social sector rather than spending money which would cater to a richer section of population should be the desired direction, with an expansionary fiscal approach rather than contractionary fiscal policy, in my opinion. Thanks.
Thank you very much, gentlemen and Radhika. I think we are out of time, so let me kind of thank each one of you. And maybe we can take two questions, given that we have already bypassed our time. So one of the questions that I see is, with the if the government is planning to see Viksit Bharat by 2047, and with so much of unemployment and inequality, is there any way to reach that? Anyone can answer that. So this is one of the questions which is being asked. Can we reach, first of all, this Viksit Bharat basically is saying that by the year 2047, we'll be having a per capita income of around 18,000 to 22,000 US dollar. The first thing is, when we are trying to look into the growth rate, are we first looking into, because if you're looking into the real rate of growth of GDP, you are not going to reach that level. So if you take the nominal growth rate, maybe you will be able to reach that level. So anyone would like to comment on that? Are we going to reach this given so much of unemployment and inequality that we see all around us?
But I just say one preliminary thing.
Yeah.
Viksit Bharat is not just a function of economic policy.
Yeah.
You need good governance. You need social cohesion, social coherence. People must have the freedom and the liberty to live with dignity and have the guarantee that their identity will not lead them to being attacked and being degraded, denigrated, and not being allowed to pursue their profession. So you need those kind of conditions in the society at large and the polity, which will allow the full flourishing of the productive capacity of people. Right now, we are wasting our energies on things which are completely unproductive. That must change. Then the question of economic policy. And before economic policy can take effect, you need effective governance. Without governance, the kind of problems that Shubhamai pointed out about schools not being just showing expenditure by painting walls, That's a question of there being not enough governance. The bureaucracy not being accountable to the people, and the elected representatives not being able to keep them in check. So these are issues of governance,
No, fair enough.
which must be solved. Without
TK,
that, there is no way.
Yeah. So do we take the real growth or we take the nominal growth for?
So if it is
Real
US dollar, then it's obviously then you need to. I mean, it will be not exactly real, but it will be nominal. But it will be nominal in dollar terms, which means that there will be considerable factoring in of the inflation. We will take out inflation to achieve dollar terms. Okay.
Okay. So is there any other question? I have room for one more question. If there is no further question, I would again like to thank our esteemed panelists for giving their time.
Can I?
Yeah,
So
please.
Bhanumurthy.
Yeah, no, I didn't want to leave Surjit like that. I think you see, there's no second opinion about fiscal policy to be brought in to, increase aggregate demand. But I think what is important is the quality of expenditures. Okay. Now, I think you also need to understand the causality, at least, I mean, if you look at the macro causality, if you follow the capex strategy, capex leading to more growth, and more growth leading to more tax revenues, that will lead to more revenue expenditure. Okay, if you follow that, you'll get a larger resources for revenue expenditure. But instead of that, if you follow the revenue expenditure strategy, I mean, intrinsically, what's happening? The fiscal multipliers. When you have a lower multipliers, you get lower revenues. Very simple, right? So I think it's important for us to understand the quality of expenditure is the crux of the macro fiscal framework, and I think this has been implemented in this country for some time now.
one more point, so I can also add to this.
Yeah.
The other positive thing that has happened in this budget is that they have announced a medium-term roadmap this time around, because the fiscal deficit target is for FY 26, which is 4.5%, now 4.4%. Beyond that, last year, FM had announced that there will be a shift to a new fiscal framework where debt to GDP ratio is going to be the anchor. And there was a lot of this talk about, what will be the precise contours of this strategy. And this time, if we look at the three FRBM statements that come alongside the budget, they have at least given some guidance on the medium-term framework that they want to reduce the debt to GDP ratio. And I think that's a very positive step. Now, there can be debates about whether by FY 31, the central government would be able to achieve 50% of debt to GDP ratio or not. But at least they have laid down a framework under three different GDP assumptions, 9%, 10%, and 11% nominal GDP assumption. So that is again a very positive step, particularly because if the central government debt comes down, the interest payments, the share of interest, the overall revenue expenditure, that comes down, because even now, if you see, around 13 to 14 lakh crore is spent on interest payments. So we have to be very cognizant of the fact that debt to GDP ratio needs to be reduced in a credible manner. And towards that, I think this time the government has articulated the strategy, and that's a very positive step.
Oh, so that's a very good note to end this discussion.
Sir, I have a question.
Okay. Bhanvi, okay, before Bhanvi, Surajit, you want to make a point?
Yes, sir. Sir, I am in complete agreement with Professor Bhanumurthy. I am also talking about digging holes and filling them up. And I think I am provoked by Dr. T.K. Arun's comment that it is not only economic inequality. Definitely, gender inequality is one of the degree of gender inequality is one of the highest in this part of the world.
And because of that, we have lower HDI rank also.
Yes. We have caste-based inequality, regional inequality, rural-urban gap is huge. So all these gaps are detrimental to ensure Viksit Bharat by 100 years of our independence.
Yeah, go ahead, Bhanvi.
Sir, I have a question.
Yeah.
Yeah, sir. So, sir, basically, if we see the economic growth rate, it's around like 6.5%. So, if we see the global scenario, like in the light of global economic situation, so how realistic is this government growth projection as compared? Uh, how realistic is the government's growth projection, sir, if we compared it to China's growth rate, sir?
Anyone can take this question.
If you
Yeah.
compare to China, I think we are definitely realistic because we don't know what is the China's number and what drives that. But I think if you look at the nominal GDP growth assumption that has been made in the budget, I think it is conservative in my view, 10.1% nominal GDP growth. And therefore, yesterday, the economic survey also talked about 6.3 to 6.8%. So, see, these are all conditional upon, many assumptions. I think this is what government would like to achieve. That let us put it that way. I think government would like to achieve 6.5 or 6.8% GDP growth with all the policies that is being presented by the fiscal and also going forward the monetary policies.
Okay. Radhika, you want to add something or anyone else? Yeah.
Yeah, just the point about being realistic, I think the economic survey's projection was 6.3 to 6.8, and it's quite realistic. It presents a balanced view because it says that there are some upsides to growth as well as there are some downsides to growth. So I think in the next 2-3 years, still we have this global uncertainty. As sir pointed out, around 6.5 to 6.8 is a very realistic growth. What is important is that the various drivers of growth should be firing. Consumption should also be high, investment should also be high, investment to GDP ratio should increase, private investment should come up, and with a steady path towards fiscal consolidation and increase in consumption. Hopefully, private investment should take some baton forward. That is what the economic survey also said, that it's not the government cannot keep increasing capex. What's important is at some point in time, private investment needs to take the investment baton forward. So I think if those all things come, then we will see a sustained improvement in growth rate. But amidst these global challenges, 6.5 to 6.8% is a reasonable growth rate for now. Thank you.
Okay, great.
But ma'am, in terms of Viksit Bharat, we were planning for a 8 to 9% growth rate as compared to China. So how can we link with that?
So that we have already talked about, that Viksit Bharat requires, even the economic survey says Viksit Bharat requires 8% growth on a decadal basis, and for that they have laid out this entire vision. So what is important is that what they have talked about, the deregulation, the reform agenda that they have talked about, skilling. As I said, unless the various engines of growth fire, we will not see an 8% growth. So it is important that 8% growth requires the various steps. It's not something that we will achieve automatically. It's something that has to happen in a progressive manner over the years. Whatever vision has been articulated, what is now important is that the implementation happens, and then we'll see a move towards a more sustained economic growth rate.
I think we can close this now, Bhanbi, with some positive note, which is we can still achieve that 8%, provided better governance, better institution, which will in a way lead to better implementation of government policies. Okay, so now I'm handing it over to you for a formal vote of thanks. It's been a great discussion. Thank you, gentlemen and Radhika, for this opportunity. Over to you.
Thank you, sir. Thank you, panelists. It was one of the most amazing and enlightening experience. So as we come to the end of today's discussion, so I, Bhanvi, on behalf of IMPRI, Impact and Policy Research Institute, would like to propose a formal vote of thanks. It is on the behalf of Center for the Study of Finance and Economics. I would like to thank all of you for attending today's deliberation, a panel discussion on Viksit Bharat, Developed India by 2047 and a Union Budget 2025-26. So we are grateful to our chair for the session, Professor Nilanjan Banik sir, and our esteemed panelists, Mr. Swabhume Bhattacharya, Mr. T.K. Arun, Dr. Radhika Pandey, Professor N.R. Bhanumurthy, and Dr. Surajit Das for taking part in the discussion and enlightening us. Later, we thank all of our participants who have raised pertinent questions and actively participated in today's deliberation. We are grateful if you're watching us later on a YouTube channel or listening to us on our various podcasts or reading our publications. So we look forward to welcoming you on the day 2 of our budget deliberations, that is tomorrow, Feb 3 at 3 p.m. for Employment, Livelihood and Union Budget 2025-26. That is followed by Education, Science and Technology, Research and Development and Union Budget 2025-26 at 6:30 p.m. So you may also find more thematic events and book discussions under IMPRI Web Policy Talk series. We hope you continue to join in future to our IMPRI Web Policy Talk and Web Policy Learning. So wishing you all a very good evening and thank you.
Thank you.
Thank you.
Thank you.
Thank you. Thank you. Thank you.
Thank you. Bye.